Firstly and foremost, happy Wednesday, everyone, aka Hump Day. It is 11:19 a.m. Eastern Standard Time here, and I was actually going to hit the record button around 10:15, which is normally what I do. I'm going to be starting to do live streams, primarily morning live streams on this YouTube channel. And then definitely do aftermarket live streams as well, too, probably in the next couple months here. My personal life right now is kind of really all over the place, super duper busy, but things are gonna definitely stabilize. If you are new, welcome to this YouTube channel. This channel is still fairly new. It's sitting right below, I think, what are we at? Like, almost 200 subs here. So if you're not subscribed and you do watch these videos, typically Monday through Friday, definitely, smash the subscribe button, entirely free. Drop a like, which also helps these videos in the YouTube algorithm. My main YouTube channel is a video game channel, 208,000 plus subscribers, Nightmare RH on YouTube, RuneScape channel, and I have started advertising this channel among my other ecosystems of different channels, but the stock market is just not very popular, which is why, honestly, not a financial advisor myself, but I have been buying stock left and right because when nobody wants to buy the fear because it's very bloody and scary, that is how you'll make life-changing money. So, in today's episode, we're going to be talking about three things. Firstly and foremost, we're going to be talking a little bit about, actually, how do I want to do this? My neighbor is actually getting some yard work done right now, so you may hear some stuff going in the background. Oh man, that's mighty loud. What the frig? Mighty loud indeed. Hold on one second. I'm probably gonna stop recording. Okay, so maybe it wasn't as loud to you all because I actually have a pretty good mic, and not to mention my studio slash office slash gaming room is very much soundproof. But to me, I can actually hear some mowers going, but still, okay. I want to talk about many different things in today's video. Not sure how I want to really order them, but we're going to be talking about SoFi. So if you are a SoFi shareholder, SoFi long-term investor, or even if you're trading SoFi, I'm a SoFi long. So obviously when I'm talking about SoFi, I'm talking about like years in the future. But still, there are traders that do watch me, and I mean, hey, if you want to place short-term bets, me personally, I'm not. I'd rather just buy the damn stock. We're going to be talking about SoFi, pretty much a breakdown of why that's happening. We're going to be talking about government data, some news in the Middle East, oil-related, and lastly, probably about AMD. How AMD is at breaking all-time highs when the rest of the market is just going down. Also going to be showing my YouTube public profile as well too, showing the power of how important it is to pick the winners. And the winners, they always, as long as you have really good winner chicken dinners, they always outweigh the losers. And it all comes down to doing your research and due diligence. Okay, let's go ahead and talk about SoFi very quickly. And if you are a SoFi bro or SoFi sister, like I said, definitely let me know down below in the comment section. So what basically pretty much happened over the last like 24 hours, it's a cluster. There's really no PG way for me to really put it. It is a cluster effing nuclear bomb. Supposedly we're in a peace talk, but at the same time you have exchanges back and forth. You got fighting happening. So it's like it's a peace talk that is experiencing tension. Maybe that the best terminology. I honestly really don't even know what to really call this other than it's just all like messed up. I myself, I have a military background. I did 15 years and some change in the USMC, Afghan vet. Got done November 15th, 2022. This stuff in the Middle East needs to like go away. It really does. We need like 200 plus years, maybe even 2,000 years of just solid peace. But like this stuff is just, it's craziness. It's craziness because at one time, well, let me put it this way. If you are not in the stock market, is it necessarily crazy for you? The answer is no. It really is not. Obviously, this is not Iraq, Afghanistan. We don't have hundreds of thousands of service members walking around for really, when it comes down to it, like, not a lot of good reasons. I mean, I don't really want to dive too much in politics here, but we stayed in Afghanistan way too long. And Iraq was also just a cluster bomb as well too. So, if you're not in the market, you're feeling it definitely at the pump. Things are going to be getting more expensive if this continues long term. You have oil prices creeping back up to $100, which the Fed has stated anything over $85 is very inflationary. Okay, so if the market sees that oil is going back to $100, it's going to impact inflation overall. Oil impacts people at, gas stations, but it also impacts factories, factory workers. Companies need oil, gasoline to operate. So if they're occurring expenses, what are they going to do? They're going to raise prices, or they're going to start firing people. And that's very scary to actually think about. So how does this impact SoFi? Well, it impacts SoFi, let alone the broader market, in two different ways. So we also got some government data today. Today we got very important data. Tomorrow is very important data as well too. And the following day, Friday, is going to be even more important data here. For some reason, my web browser just completely... man, I'm having a whole bunch of technical issues today. Hold on. There we go. Okay. Why does this look very weird? There we go. Okay, so today we basically got ADP numbers. Employment came in better than expected. Now, why is the stock market looking at this as a bad way and punishing the market? It's because if government data is coming in better than expected, that means there's no need to cut rates. The market is throwing a hissy fit because there's no rate cuts, and obviously we have oil very high, and there's a lot of fears around rate hikes. So until those fears around rate hikes go away, and by the way, I do believe that we're not going to be getting rate hikes, and the reason being is because the Federal Reserve, in my opinion, are a bunch of thieves. I mean, they're not even part of the U.S. government. The word federal does not mean they are part of the federal government. They are a separate entity. Pretty much, they are a credit card to America, if you really think about it. They have no tie to America at all, but yet they very well affect us. And the president of America may pick the Fed governor, but understand the Fed governor is one vote out of, I believe, 12. Don't quote me on that. We may have the Fed governor on the side of the president, the new Fed governor coming over that's already on deck, Kevin Walsh, but he himself has to convince the other board members to vote in his favor. So you can very well have the Fed governor say, yeah, let's lower interest rates, and then 11 votes come in saying, you are high, we're not lowering interest rates. You have no power. It's a joke, okay? It's a political joke. The U.S. government, in theory, you can't, like, it is... It's very, very libertarian core principles. Taxation really is theft. And if you actually look into the Federal Reserve, they very well violate, like, all of our civil liberties, our freedom. It really is a scam. But at the same time, our government just keeps borrowing more money, and the U.S. debt just keeps going higher and higher, and the Federal Reserve just keeps printing more money to dilute us. But here's the catch. The catch is that the Federal Reserve, I don't believe they're going to be raising rate cuts because they've stated before, raising rates. They've stated a lot before that as long as inflation stays below 5%, which it is, and as long as we don't see something crazy like 2022, they've been around the block for a while. They're not going to automatically flick the switch and be like, okay, we're going to raise rates. And by the way, I've been in the market now for over 6 years, and I stayed in the market all throughout the last 6 years. I came out of 2022 profitable. 2023 was a very much nightmarish year for myself and many other people as well too, no pun intended. When the Federal Reserve raise rates or lower rates, you don't see an impact in the market. You don't see an impact in the data or the consumer overnight. Stock market, you do, because the stock market prices in the future. Okay, it literally takes a rate cut or a rate hike to actually affect the U.S. economy months. And if you don't believe me, look it up. It literally takes months. If not, it can take 6, 9, 12 months to actually impact that. So, by the Federal Reserve literally saying, hey, we got to raise rate, no, it doesn't work like that, okay? A lot of people are having very much fears of PTSD from 2022, which was a very hellish and scary time. And I remember watching the Federal Reserve every single friggin' meeting and just watching the market nosedive when the Federal Reserve came out and raise rates. We need to keep raising rates. It was terrible. Very, very, very bad time. But phenomenal time if you bought stock. That's pretty much what it comes down to. So the data that we got today, it's good data, but it's also signaling that we're not going to be getting a rate cut anytime soon. Now, something that is utterly just nonsense, and understand, or I should say, if you are new to the stock market, this may seem like gibberish to you, but it's not, okay? We are 14 days and 2 hours away from the next FOMC meeting, June 17th, the first meeting from the Fed Governor, Kevin Walsh. Really looking forward to this meeting because I want to see what he says. I don't believe he's going to give us a rate cut. I think he's going to come out and he's going to squash rate hikes, okay? I believe that he's going to utterly just come out and say, hey, we are not looking to do rate hikes. The market is ran by bots. If you don't believe me, look it up. It's ran by algos. It's literally ran by bots. All this data here is predictions of what is going on in the world and prediction from bots. Yes, okay, this is how it works. I know that sounds crazy, but it is crazy if you really think about it. We're the wealthiest nation in the world, based by GDP, and our monetary system is literally ran by algos in the stock market. It's crazy, right? Back in December, I started to put out a lot of videos on this YouTube channel about a little over 6 months ago, actually 7 months ago, give or take. And we were not supposed to be getting a December rate cut. Powell came out and shocked the market. He gave us a 25 basis point rate cut. And then he came out in January and said, hey, we're looking at probably we're not really looking at if any rate cuts this year, maybe 2, but we're very cautious. And then obviously the Middle Eastern stuff happened and stuff just kind of shit the bed from there. Now, the market sees a 1.6% chance of a rate cut, a 25 basis point. That's more than likely not going to happen. But otherwise, the market sees we're going to hold rates. Now, let's go further, okay? If you want to look at this website, I can go ahead and put it. This website's going to be down in the description of this video. Now we go to July. What starts happening? Well, now we have a 25 basis point rate hike. We go to September. Now we even have a greater rate hike. Now it's 25%. Now we go to October. Now it's 32% of a rate hike. Go to friggin' December. It's like we are at a coin toss of pretty much, actually greater than a coin toss, because now you're at 41% plus 13%. Yeah, it's about greater than the coin toss. Go to January, forget about it. You're at 2/3 of a rate hike. Go to 17 March, you're at 3/4 of a rate hike. This is what is scaring the market. Okay, couple things. One, SoFi will be just fine because SoFi grew during a high interest rate environment back in 2022. They made it out. They also grew in 2023 up to the right. And then during 2024, when I started taking a long position, they've been just fine. So SoFi is reacting to what monetary policy is going to. I believe Kevin Walsh is going to come out June 17th, and that is also 1 week before my 38th birthday, June 25th, baby. Would love to be on the golf course. The thing about it is I believe Kevin is going to come out and he's going to squash rate hike fears. He's going to say, no, that is stupid. We are not raising rates because of this. That's stupid. He will not give us a rate cut, but the fear of rate hikes are going to go away. What's going to end up happening for SoFi? SoFi is going to end up rallying pretty much where we were going the last week or so. So if we zoom out, SoFi pretty much peaked right below $20, and then all throughout Monday, Tuesday of this week, we've been selling off because of Middle Eastern bullshit. I believe SoFi is going to be low 20s from squashing rate hike fears. Okay, we get rate cuts. SoFi is going to be $28, $30 easily on its way to 35 past all-time highs. So we have to endure pain as SoFi longs, or if you are a SoFi long, you're going to have to endure SoFi pain. How accurate do I think I am? I think I'm probably 70% accurate. Am I going to be running out and placing bets? No. I own close to 2,300 total shares of SoFi on two accounts. I'm loaded up the wazoo. So therefore, SoFi, yeah, I mean, if I'm wrong and SoFi goes down to $15, I will be adding more shares. If I'm right, I got shares built. Hey, cool. We're going to be at $21, $22. So that's pretty much what's happening with SoFi. Okay, government data we talked about, Middle Eastern, oil, everything, Bitcoin. Bitcoin is showing a lot of signs of weakness, and it's not getting any better. And here's the scary thing about it. And here is something that I'm actually very much thinking about. And it's making me very much maintain a decent amount of cash. And the reason being is because, so I made a video about this before. This is just obviously, this is all speculation, but at the same time, it's crazy when it really comes down to it. So Bitcoin goes through these very insane cycles. And apparently Bitcoin is going to bottom this year in December around $30,000 or between $30,000 to $35,000. How crazy is that? That's a 50% drop of where Bitcoin is at right now. Why would this happen? Because there are indicators for cryptocurrency and there are different cycles that basically pretty much happens. Understand that this is all speculation, but you want to know what? This is how the market a lot of times works. I remember back in 2021, Bitcoin was at its high at 65, and then it got cut in half. Went down to 30K. You want to know what's pretty crazy? Back in July, I had actually enough money on the sidelines to actually go ahead and buy a Bitcoin. I didn't do it. But ultimately, Bitcoin broke its all-time high, went to 69, I think maybe 70, and then ultimately 2022 got as low as 15. You want to know what's even more crazy? around this time frame, I had plenty enough cash to buy some Bitcoins. Well, why didn't I? Because I was scared. Not gonna lie, cryptocurrency is very scary. But obviously Bitcoin went on a utter tear. Obviously we saw a Liberation Day haircut, but a lot of people are calling. A lot of people are saying that Bitcoin's going to go down to 30,000. So, Bitcoin is showing massive signs of weakness, but the market is going past all-time highs. That's also very scary. Okay? So, man, I don't really mean to make this video kind of long, but this is probably going to be another long video here. I tend to keep my videos under 20 minutes, but yeah, there's just a lot to talk about. It's scary for multiple reasons, because one, we typically you have Bitcoin as a it's typically Bitcoin will follow in suit of NASDAQ. So as the NASDAQ goes higher, Bitcoin will follow the NASDAQ, because Bitcoin in a way is just a different asset than the NASDAQ. But look at the NASDAQ. The NASDAQ is making a new time high, making on a new time high. New all-time high, new all-time high, new all-time high, new all-time high, ripping, right? And then you have Bitcoin, which is, going to lower lows. It's pretty much the opposite of what has historically happened. A lot of times when there's so many people saying something is going to end up happening, typically the opposite happens. But when you have a lot of different degrees, such as the overall market is just busting through all-time highs, and then you have a non-backed asset such as crypto going to lower lows, the thing about it is that if the market were to, let's say, go into a correction, where would Bitcoin go to? Now, Bitcoin very well could do the opposite. If the market pretty much is going to start crashing, hypothetically, maybe money goes into Bitcoin, and maybe money reverses and goes into crypto. That can happen. Maybe the cycle of the market and also crypto going parallel, maybe that's going to be broken. Maybe now cryptocurrency truly is going to be looked at as kind of like maybe it's going to be looked at kind of like precious metals in a way. Hey, you got basically stocks like in the dumpster. Where can we put our money? Okay, well, hey, we can put our money now in crypto. Maybe that's going to be the thing. Or on the flip side, what if hypothetically crypto, if Bitcoin really does go down to 30,000? I can tell you if Bitcoin goes down to 30,000, I'm going to be friggin' I'm doing whatever it takes to buy that coin. And I know that there's going to be people out there probably selling real world assets. I actually have a friend that has been buying stocks left and right, and they actually sold some ammo to actually get some more cash. They're obviously a firearm collector, ammunition collector. I mean, by all means, I am too. But obviously, if there's going to be people, I kid you not, that are probably going to sell maybe a second vehicle, maybe even sell a piece of real estate to really get some Bitcoin. Me personally, at that point I would own my first Bitcoin. So that is utterly crazy. Hypothetically, if Bitcoin does break all the way down to $30,000, but you're gonna see me on this channel. I'm gonna pick up some Bitcoin for the first time, because I'm not gonna let this opportunity go once again. Am I bullish on cryptocurrency and Bitcoin for the future? If you know who Tom Lee is, he believes that Bitcoin in the next several years is going to be $250,000. Yeah, that's a bold statement. I can see that happening. Yeah, you're talking about 800%. Hypothetically, if it gets down to $30,000, 700, 800%. Yeah, that is massive. Okay, AMD. let's go to the elephant in the room here, right? So, if you are new to this channel, like I said, welcome. I'm doing a public account challenge publicly for motivation purposes, looking to take this sum of a couple 10 figs to 6 figs in the course of 17 months, was 18 months, but I deposited a large sum of money into this account, so I lowered it down to 17 months. If the market starts to sell off, I'll deposit more large sums of money, but I bought a tremendous amount of stock on this account, more than I honestly really thought I would in the last 6 months here. So, AMD. You look at AMD on Monday of this week, 2 videos ago, AMD was at 135%. You go back last week, AMD was about 120%. Go back a month, AMD was, I think, maybe at 50% up. Go back a couple months, I was down on AMD. I have done a tremendous amount of research and due diligence into AMD. And one of the things that I did was look at what Lisa Su pretty much said. Lisa Su said in 2022 and 23, we are 2 to 3 years behind NVIDIA. What happened to NVIDIA? Wall Street ate up NVIDIA. Why? Because NVIDIA was the only friggin' super duper chip company out there. Well, guess what? Now is 2 to 3 years later, NVIDIA, could you very well get a double up on NVIDIA? Yeah, you could. It's going to take a lot longer than getting a double up on AMD. AMD, and a lot of people dislike me for saying this because this is factual. AMD, or rather NVIDIA, is a phenomenal company. They're the world's greatest, largest company, okay? Richest company in the world. Richer than Apple. They're the top banana of the top bananas, okay? They're a phenomenal company. They're not a bad company. But here's the reality. The stock price performance of AMD is going to outperform NVIDIA. What does that mean? Keep it simple. Beginning of this year, NVIDIA. Don't focus on the market cap. Focus on the stock performance. Keep it simple. This year, NVIDIA, at the beginning of the year, I'm just throwing out random numbers. The beginning of this year, NVIDIA, picture NVIDIA at 150 bucks. Picture AMD at $200 in January. Now fast forward. Let's say hypothetically December, AMD is $1,000 and NVIDIA is 300 bucks or maybe 400 bucks. Well, how much percent of a gain did you make in NVIDIA stock price and how much percent of a gain did you make in AMD? Obviously, if you are a long in NVIDIA and you have a position from 2022, okay, you are because when you have a position that is such, when you have like a 2,000% gainer, that position scales very much larger over time. Okay, but my average on AMD is 200 bucks. I mean, if AMD goes to $1,000, that would produce me a lot bigger of a return than if I were to take a long in NVIDIA beginning of the year. This year, the stock market knows that AMD is going to outperform NVIDIA on the stock price. Not on its numbers, not on its revenues, not on its EPS, on the stock price. I believe that this year, maybe in the later quarters, AMD is going to outperform NVIDIA on its growth rates. And then next year, that's when the party is really going to start cranking for AMD. So the moral of the story is that if you do your due diligence, all the red that you're seeing on the screen, it's just, you got red. I'm probably very much going to be cutting some red here very soon because I see other opportunities in this market because there's so many friggin' discounts. So I can definitely go ahead and take some losses, take some casualties, but that's the thing about it. At the end of the day, if you're going to be in this game, this roller coaster ride, it's a very simple question, and it's also yes or no. are you a profitable investor? Are you a profitable trader? I can say yes. Out of the 6 years now, I have been 5 out of 6. I have been profitable. 2023 was the only year that I was in the red. In 2024, I made up all. When I say in the red, that means I had more losses in 24. I had more losses in 23 than I did as profits. So you are in the red. 2024, the opposite, came out of the red. And then last year, once again, phenomenal Liberation Day, life-changing money. And this year, I'm on track to make also massive, massive gains between this profile and also my private profile too. So, closing note, do your due diligence, but when you set up your investing, you set up your trades to very much around companies that are going to be winner chicken dinners, hey, you can very much afford to be wrong. And I could very well be, to be honest, PayPal, obviously not working out there. Palantir, I'm comfortable with. Adobe was coming back to life, but I really got to see how SaaS pretty much performs, because Oracle just blew my mind. I ended up selling a tiny Oracle position a couple weeks ago. I was up over 40% in under a month. My strategy was only going to be in it to be, as a double up. I rolled that money into ServiceNow, which was so great. A couple weeks ago, my ServiceNow position was only up by like 2-3%. Crazy, right? I do believe, but Adobe might be the harder one, and I very well could deleverage myself on maybe making my Adobe position size smaller. I ended up taking my Meta position down a little bit too. So the thing about it is that you gotta listen to what these CEOs are talking about. I'll go ahead and conclude stuff here. Sorry for the longer video. It's a lot. Tomorrow is definitely going to be a shorter one, I promise. Hopefully, right? Like these videos if you enjoy them, and I'll see you all tomorrow on a new episode.